Hi, a very good morning to all of you. This is Arun Bhaskar from Bhaskar Ki Business Bate. It's a channel that comes to policy analysis, business stories, and conversations. But at 8:15 in the morning on Saturdays, we bring you BKBB, which is news behind the news. And as always, we try to look at headlines that make a lot of difference to India and the world. And my co-anchors today are Saloni, Janvi, Hussaina, and as always, Katya. Welcome all of you. It's good to have all of you here. And today, we're going to discuss three very important titles, and the titles are there on the screen. You have something on the Iran regime, on how Iran's regime change has not worked out. You have something on crude becomes a problem for Russia. And lastly, we have, and this is equally important, how the government floats more bonds. And do watch our podcast today, which is on Venezuela. We talked to Venezuela last week, and Venezuela and Iran and Russia, all of them relate to how the US is trying to wreck the world. Anyway, in the meantime, let's begin our news. Click the subscribe button, click the like button, and tell all your friends about us. Let's begin with the first story, Saloni, on Iran.
Yes, sir, Trump has announced that US will impose 25% tariff on countries that trade with Iran. This came in response to anti-regime protests there. Over 2,000 people have died in these protests, including protesters and security personnel. So, talking about the tariffs, the US has already imposed 50% tariff on about 55% of India's exports. If India continues trade with Iran, an additional 25% levy would raise the effective tariff incidence to 75%. India's trade volumes with Iran, however, remain limited, standing at $1.68 billion in FY25. The Federation of Indian Export Organizations said that these tariffs will have almost no impact on India. The exporters body, however, warned of a large impact on Iran's currency, already at historic lows, which could weaken further and affect both Iranian exports and imports. For India, Iran is a huge market for basmati rice and high quality tea. Basmati exporters said that the ongoing unrest in Iran has pushed shipments to a near standstill, leading to a sharp fall in mandi prices. Market participants said prices of key basmati varieties have fallen by 5 to 10 rupees per kg over the past week. Tea exporters have sought clarification from the Union Ministry of Commerce on the proposed levy. Iran is the largest market for India's orthodox teas, accounting for about 40 to 50 million kg. Though much of the trade is routed through the UAE, industry data shows that during April to November 2025, Indian tea exports to Iran rose to 10.69 million kg from 8.32 million kg a year earlier. Exports to the UAE stood at 45.66 million kg during the same period. Even as exporters await clarity on the tariff, payment disruptions are already emerging. Shrimp exporters are concerned about the fallout in the US market, while dairy exports are relatively small. Value-added products such as milk powder and ghee are expected to be hit. What's your take on this, sir?
Thank you, Hussaina. In fact, this is one of the most major developments in recent times. This was not the first time that someone tried to bring about regime change in Iran. It began way back in the 1940s when Mossadegh was a prime minister. Britain did not want to pay a higher royalty to Iran for the oil it was extracting from there. So Iran nationalized the oil industry. Britain left the country and along with the CIA tried to instigate a riot, succeeded. Mossadegh was thrown out of power and the Shah of Iran came in. The Shah of Iran, with US support, remained in power till one day he signed what is known as a capitulation clause. He agreed that Iran would not try any prisoner, any culprit, even if the crime were committed in Iran. When he submitted to the US by signing the document, crowds erupted, and the Shah was thrown out of the country, and about 400 Americans were kept captive for almost 400 days, much more than a year. America has never faced this kind of humiliation. Reagan tried to send 2 helicopters, the Marines, to free the captives. The Iranians caught the 2 helicopters, and even the Marines are sent as prisoners. Then there was a negotiated settlement. Details are not available, and all the Americans were freed. Not one complaint of ill treatment. And then, of course, Iran. They tried to topple it once again with Saddam Hussein, funding Saddam Hussein to proceed against Iran. That did not work. Then they tried it once again when Israel tried to send in drones and killing the top brass. There was no regime change. The government did not fall. And now they tried again. And as Mike Pompeo's tweet shows, it was USA and Mossad together which had instigated this riot. It was not a popular uprising, in the same way as Maidan was not a popular uprising. It's good that the Iranian government was strong enough to counter the protests who had weapons aiming at the police. Iran is now temporarily safe, though the sanctions are hurting. Will India succumb? Remains to be seen. India cannot succumb because India needs a Chabahar port. Otherwise, the entire advantage goes to Gwadar, to Pakistan. So, it's interesting times. Thanks to Saina. Very, very important development. And we go to the second story, which is equally important, and that is how crude pressures on Russia. Come in, Janvi.
Yes, sir. So, according to Bloomberg's vessel tracking data, at least 12 oil tankers carrying Russian crude are currently anchored off the coast of Oman. Some of them have been sitting there since mid-December, and the oil is loaded. It's paid for in theory, but hasn't been delivered yet. Now, this detail really matters because it's not about Russia cutting production. It's about Russia struggling to move its oil. Since the Ukraine war, Russian crude hasn't vanished from the global market. It's been rerouted mainly to Asia. India and China have become major buyers attracted by huge discounts. But this system depends on fragile logistics, shadow tankers, alternative insurance, non-dollar payments, and a willingness to look the other way on sanctions compliance. And this workaround is now starting to crack. Shipping firms are becoming more cautious. Insurers are tightening their checks. Financing and payment settlements are taking longer. And in some cases, buyers are delaying or renegotiating cargoes. And the result is the oil getting stuck there as floating storage because clearing the next step has become too risky or just too slow. It has become a real problem for Russia because every day that a tanker sits idle, costs rise and cash flow slows, and oil that can't reach refineries quickly loses leverage in pricing negotiations as well. So discounts have to increase. For global markets, this makes trade slower, costlier, more uncertain, and we know that uncertainty is poison for commodity markets. So what's happening off the coast of Oman shows that Russia can and is still pumping oil, but moving it cheaply and without many consequences is now starting to get a little harder. So what do you say about that, sir?
Is being pressured by the US, and so far Russia has withstood it. Now they're trying to see that Russia can't sell its oil. India has reduced its oil offtake but has not stopped it. Katya, what do you have to say about it?
So a couple of things, sir. So this whole sanction, and oil, especially India. Well, let's come to India on this matter. So it seems that a bunch of companies are refusing deliveries, and according to a Kotak report, it is the PSU companies who have actually long stopped taking Russian crude. The larger companies, the larger export oriented companies are complying later on. But the problem is in steps, sir. For one, crude price in general is falling, so a discount over an already low price is going to be very difficult, because Russia also has production costs. So it won't, that whole discount breadth will be thinning, narrowing very much. So the whole discounting part is going to go on, because in general the demand for oil is also going down because of low economic growth. And number two, Indian companies are also complying, or either are not complying. They've got 2 feet on two boats and are sitting literally on the wall, because US is also not buckling into the pressure. On top of it, we have Iran issues. Like I said, we cannot ignore every country, and we cannot ignore Iran as well. So it puts India in an extremely precarious position. It puts Russia in a surprisingly precarious position, because, like I said, when crude price itself is low, they can't give too much of a discount right now. That's my opinion, sir. And India is going to have a very, very tough time, like the rest of the world. At least our regime is still sticking on.
Thank you. Thanks, Katya. There are only one more. There's one more point I would like to mention, that Russia's biggest savior is China. Much of
Right.
the oil is now being sold to China, and China doesn't care about the US sanctions. It's just continue to pump in Russia's oil because it needs it at these low prices. Second, the EU is broken. Till now, it was vibrant because of because of low pricing of fuel from Russia. Now it's hurting, and all European countries are literally crying. Greenland has made Russia more attractive to the EU. Expect EU to start picking more and more quantities of Russian oil. There might be a solution. But anyway,
Right.
it's a very important development. And let's go to the third story, which is equally important, and that is on bonds. Come in, Hussaina.
So, sir, India's government bonds will now not be included in the Bloomberg Global Aggregate Index for now. So, Bloomberg Index Services Limited says that the decision is due to unresolved operational and market infrastructure issues, and the next review has been pushed to mid 2026. Now, sir, at first glance, this sounds very technical, but the implications are very significant because, firstly, India was being considered for about a 1% weight in the index. That may seem small, but it could have translated into nearly $25 billion in foreign inflows over 10 months. So, for a bond market that has been gradually opening up to global investors. So, now this delay kind of matters. And also, the question that arises is, why is Bloomberg hesitating? So Bloomberg points to gaps in India's market plumbing, the lack of fully automated trading workflows, settlement delays linked to post-trade tax processes, and the complexity of fund registration procedures. These may be acceptable for emerging market indices, but the global aggregate index caters to a much broader and more operationally demanding investor base. Also, it is important to note the timing because that is very uncomfortable. Domestic bond yields remain elevated due to supply pressures, while foreign flows have been uneven. So the 10-year government bond yield has hardened since last year's rate cut, even as the RBI signals more easing in 2025. In simple terms, to put it more in perspective, borrowing costs remain sticky and global money is cautious at the same time. There's also the external backup because India's trade dynamic are under strain, with financial year 2025 seeing the highest trade deficit, reflecting broader global demand supply mismatches. While not directly linked to bond indices, it adds to the macro picture investors watch closely, which is currency stability, trade balances, and policy predictability. Also, I think, sir, it's worth noting that India isn't being shut out globally. The country has already been included in JP Morgan and FTSE Russell local currency bond indices, but Bloomberg's global aggregate index is a different league. It's larger, more conservative, and at the same time more influential. So the message then here is that global investors are interested, but they are looking for more smoother systems, faster process, and fewer frictions. What do you think about this, sir?
It's a very important development. What you explained is right. India will need to raise more money because of its deficit financing. And if they can't be picked up, it has to offer higher discounts. Higher discounts means higher interest rates. Higher interest rates means bigger deficit financing because the government is left with less money for investing in capital goods, in infrastructure. But it has to invest. So it means it'll need more bonds. Very interesting situation. Katya, what do you think?
So I have a feeling, so all the rush we had, equity rush also we had because of the inclusion that we had JP Morgan index. All that is going to go down. Also, very important point, our trade deficit is also widening. For to be included in these bond indices, our macros have to be strong. If you remember, we were actually bringing down trade deficit. We were our currency was stabler when, couple of years back when this whole thing started happening. But a lot of that is also reversing. So and it's a thing, if one index includes, another index also includes, so they come in pairs. So there could be reversal there as well, sir. I doubt if it's only about market infrastructure issues. It looks like a polite reason, but macros have been going down, sir. So
Yes,
and
and
that is
FDI and FPI both disappeared.
both are vanishing. Yes, they're vanishing from the markets. And when 2 years back this whole thing was proposed, and when they started coming in, we were in a different position. It was looking like we're going to go somewhere. Now,
Correct.
because of tariffs and other issues, we are in a very, very, very difficult position.
Thank you, Katya. All the three stories are critically important, and unlike many other channels, we look at news behind the news. Incidentally, I must share with you one good piece of news. Our total subscription base has crossed 50,000. It's all because of you. It's all because of the support you've given us. We hope to grow further, and we need your support there as well. And thanks for watching this channel. Thanks for watching this BKBB News Behind the News. Look forward to seeing you next Saturday morning. In the meantime, have a great time, have a great weekend, and may the entire week be meaningful and profitable for all of you. Take care, good luck, all the best.